and feel free to go ahead.
Okay. Hi, everyone. I'm Eniola. I'm first year. Well, shoot, I'm a second year. I'm a second year medical student at Truro in Harlem. And with me is.
Hi, everyone. I'm Chethana. I'm also a second year, so just finished first year. And I'm also from Torocum, Harlem.
Okay, so we're going to start. Chethana, you want to do this?
Sure. So to start, we're all here because we know that applying to medical school and after that paying for medical school is our biggest issue. And as international students, our options are limited because we cannot apply for most of the federally funded student loans. So when it comes to international student loans, our options are the private student loans. And these can come in a lot of different shapes and forms, and that's what we're going to be talking about throughout our presentation today, like what factors to look forward to when considering for what best fits the kind of student loan that you need and so on. So stay tuned.
Yes. Sorry, I just need to pull up something.
All right. So till Eniola's pulling it up, I could talk about this. So when I said factors to consider when applying for a private student loan, so there are different things ranging from like interest rate, term length, repayment terms, and cosigners. So these are terms that we will go into like in depth in the upcoming slides, but just to give a little overview. So interest rate, this is something that's very important when it comes to you paying, because principal is the amount that you're borrowing, but to this get added something called an interest rate. And that in total will determine what you're going to be paying back towards the full term of your student loan. So this interest rate, it depends again from which private student loan lender. So it depends from lender to lender, but it also depends on your borrower's credit score. So most of the time as international students, we need a cosigner. So in this case, it'll depend on your cosigner's credit score. Term length, this is something that'll depend from student to student. So you will decide whether you want to pay it in 5 years, 10 years, 12 years, 15 years. And that's something you will personally make the decision depending on how much you will be making during residency, after residency, and so on, and what other sources of income do you have, and so on. So that's what term length would be. And repayment terms, so this varies again from student loan lender to lender, but most of them have, again, repayment options from like 5, 10, 12, 15 years. But something important to keep in mind is there are repayment options that have student like the cosigner relief. So you might be able to relieve your cosigner of their duties certain time after your steady payments, for example. So that might be a benefit in some student loans versus others that don't have that option. So we'll talk about these in the coming slides. And most important, most of us need cosigners. So
yeah,
that's, yeah.
And a cosigner can be a sibling, spouse, parent, anybody, as long as they're willing to put themselves on the line and say, if this person does not pay their loan, I will be the one to pay it, which is a big ask.
Yep.
Okay, and so yeah, the things that international students need, you need a valid passport. It needs to be valid for more than 6 months. Otherwise, I think you might have issues. They might need you to renew your passport before they give it to you. Some loan companies require you to have a valid student visa. As you all know, you can be in this country without a visa because visa is just to come in and out. But they will take your I-20. But some people really do want for you to have a visa. You need a good credit score, although your credit score does not really matter much. That is really on the cosigner. Bank statements to say like, this is how much I have in my bank account, this is how much I will be using to pay for school, and I will use this loan to pay for the rest. You can also support it with tax returns, like your pay stubs. And if you're a returning student, you need proof of good standing.
All right. So when it comes to documents,
Yes.
you need,
Sorry.
yeah,
Sorry,
go
Jessica.
ahead. Did you want to
Yeah.
go for it?
And so for your cosigner, they need to have a good credit score of like in the 680 or higher. It's always better for them to have it higher because the higher it is, the lower the interest rate. Um, like I said, it really doesn't matter if you have an 800 credit score and your cosigner has like a 500. You're probably going to get denied. The burden is really on the cosigner. So they have to have a good credit score, steady income. They need to have been at their jobs for more than 6 months. Otherwise, they need to show pay stubs for the previous job, and it keeps going. And they also need a long credit history. Just anything that works in their favor, like they pay their rent on time, the car notes, they pay all their debts. They're not owing that much money. All of those things are very useful. And you also need the most important thing, them willing to co-sign your loan because it is a big ask. Medical school is expensive. I think the average tuition is like $60,000, and that's just tuition. So it's always nice to have a good relationship with someone who can be like, I know you're going to pay this. I'm just going to put my name down, but I know that you're going to take responsibility for this. And you also need to state it clearly that this is my responsibility. I'm just using you on paper. They like to hear that. Okay, check.
All right. So again, more documents that the cosigner needs to have. So again, like Eniola was saying, they do need to show their proof of income. This could be in the form of their pay stubs. They need to have their tax returns, and sometimes some of the loans ask as far as like 3-4 years back worth of tax returns. So that is something they need to have in handy. And any other document that shows the cosigner's income, and other things that they could show proof of assets. So this needs to be in the form of like bank statements, investment statements, or other documents. Proof of employment, again, a letter from an employer that the cosigner is working at, and so on. And their good employment history, like we were saying, long-standing employment history is important. Credit report. So the lenders, some of them might actually ask for their credit report as well to see if they're in good credit standing. So to talk about my experience with student loans, so how I started going about the process is, again, I was at the beginning very clueless, so started researching about what student loans are, what options are available, and then common themes I started seeing were that, okay, so we have private student loans, and started seeing like certain names popping up. So I researched more in depth about, let's say, different kind of lenders and so on, but finally decided that I was going to go with 2 to 3 private student loan lenders and did some in-depth research about them. So at first I decided what did I really want to borrow the money for? And I went with just tuition because I live with my parents, so that I only needed the money for tuition. But students, they take student loans for tuition fees, books, living expenses, and for all of the above, basically. And after deciding how much I wanted to borrow, I researched into, again, the different options. And I ended up applying for Earnest, Discover, and I believe Sallie Mae. These were 3 student loan lenders that felt like had good rates and fit the criteria that I wanted. And the criteria, they depend. Like I was talking to you about different factors. So you will start seeing what factors are the ones that you want to prioritize when selecting what lender works best for you. And I also double checked with my school or university to see which lenders they accept, because not all schools accept all lenders. So that's also a thing to keep in mind. So one thing to make sure when applying for student loans, even just to get a determination of the rate, they do like check your credit history and credit score. So of you and your cosigner. So that might impact yours and their credit score. So make sure you don't go too crazy with applying for different student loan lenders to get different rates. So research, narrow it down, and then apply to a couple if you want to compare rates. Because usually in the websites, they do have like a range, and that range is huge. So you don't really know which, where do you fall into in that range. So it could be from like 2% up to 13, 17%. So you could be somewhere in the middle, but to know what exactly your number is, you do need to kind of apply. That's the only way they will give it to you. So I applied for a couple and then heard back from two, and I went with Earnest. So that's what I landed up with, and their interest rate. So if you could go to the next slide, their interest rates. So they had two different types, like most old lenders. They had fixed rates and variable rates. So figuring out what option you want, I went with fixed rates because I didn't want my rate to change with as time goes on. Sometimes it could drop, but sometimes it could also go high. So let's say my variable rate started with like a 2% now, but my fixed rate was like 6%, but down the line, the variable rate could actually go all the way up to 16. And I didn't want to take that chance. So I ended up picking fixed rate, and I got something in the middle, around 7 point something percent. So that was like my rate. And when it comes to again, deciding and further reiterating what plan you want, I check to see what my repayment options are. So the sooner you pay, usually for a student loan, the lower your interest rate is. But as students going into the medical field, there's no such thing as sooner paying, because once we graduate med school, we have residency, and most likely that salary is not enough to like really pay a larger contribution to your student loan. So some might defer that and pay after you finish residency and so on. So repayment plans change. I decided to actually start paying during residency, but little by little. And even right now I'm paying like a very small amount. So it really depends on how you want to pay back. So that in turn affects your interest rate. And so I think I went for about 10 to 12 years of repayment. So that's sort of how I went about applying to Earnest and where I'm at. And the student loan, we have to apply for it every year. That's the plan I went with. So now I'm starting, like this summer is when I'm doing the second year application. So every summer you would basically apply for the next year, and that's how you would get it.
So with private student loans, most of them usually do not have fees compared to federal loans, which you have to like calculate in there. So it's nice that we get to either not take that extra 500 to 700, or use it for something else. And so from my experience, I started off with actually using Fast Choice, which I found on Case Western's website for financial aid. And you put your like school there, you put like everything that they ask for, and then they give you a list of lenders that has been used by your school as an accepted. And those ones are usually Earnest, Sally Mae. Those people always make it on there, and so it's never wrong a wrong choice to go with those lenders. So yeah, I've researched different types of private loans. I actually applied to way too many, which is all my mistakes. Like, do not apply to more than 3, because that would just ding your credit score. It creates too many inquiries, and those inquiries don't leave your record until like maybe a year or more, which sucks. And so yeah, Sally Mae, Accent, there's College Avenue. They lend to international students. SoFi. I think the issue with SoFi was they were one of the people who really wanted the visa, and as well as Discover. And so I decided, like, okay, how much do I want to borrow? Like, you can choose to. It's not like it's not like federal loans that you have to take what they give you. With private loans, you can choose to take little or more, as long as it's covering tuition. Like, financial aid offices usually don't care about you. They just care that the school is getting their money. And then you select what fits you. Like, is it the interest rate that you want? Do you want to pay a lower interest rate over time, fixed or variable? Or do you want to pay this over 5 years, over 20 years, just like Chethana said? And it gives you the option of, like, do you want to pay $2,000 a month right after you graduate, or do you want to defer to residency? Do you want to pay $25 every month until you have to pay for residency? These things decrease your overall loan and sometimes help with monthly payments. Like for example, for the 25%, $25 every month, it gives you like a 0.25, like Accent gives a 0.25%, just like the automatic payments. And so that's another thing to consider. So yeah, here's all that information that I was talking about. And they cover like your full tuition amount, which is amazing. I mean, no one's tuition amount is $200,000 a year. That would be crazy. And then you have to apply, if you want to use them, you apply again the next year. It's actually easier to apply with the same company if they already have your information. You just want to know if anything has changed. And so after you decide to go with them, then the last step is to send your application to your financial aid office, and then they certify the loan. That's where they say, okay, this person is taking the right amount that is going to cover their tuition and fees and maybe anything else. And then they send it back to you, you sign, you say, yes, I'm going to go with you. And then they disperse your money. And I don't know if we talk about that. Okay. And so they disperse the money and they divide it into two for the fall semester and for the spring semester. Usually they divide it into equal halves. But the bad thing about that is this fall semester has less months. And so you think, oh, I have so much money. And then you get to spring and it's divided into 7 months, including summer. And then you're like, I am broke. So you want to make sure that you say, I'm only going to send myself a certain amount, because they do dump everything in your account. And so you have to like maybe take out like 2 or 3 or 4,000 a month, and you say, I'm going to use this for rent. I'm going to use this for whatever I need it for, but make sure that it's enough for 12 months compared to 10 months that they show on financial aid's page. So that's another thing to consider.
So these are, this is just a list of like different lenders that are very popular among international students. So again, this has those that do need cosigners and some that do not. So the thing with student loans without a cosigner, they're most likely to have higher interest rates because they don't have a guarantee that you will pay back, kind of thing. So they will most likely be on the higher end of interest rates. And as you can see, the one Empowered starts at 13.98 without a cosigner. So that's pretty much on the higher end, things like that. But when you do have a cosigner, and depending on how good their credibility is financially, you could get a lower interest rate. And that's one thing. So for more information, I did add a link. I know we'll be sharing the slides later. So this link had basically a summary of all of these different companies. So you can go into little details about them and start your research from there, basically.
Yes, and another thing to mention about Empower is they only offer like maximum of $100,000 forever. So it's not something that you can apply to again. And like I said, 100,000 will only cover maybe like your first year. What are you about your second year? You have to apply to any one of these other ones. Prodigy Finance is the one I just saw, like, and I don't know if anyone's actually used that, but you run into the problem of, will my school accept money from Prodigy Finance? So do we have any?
I did want to add something. So some student loan lenders, they do allow you to pay early. Like, let's say you got like a bonus from something and you wanted to pay a certain amount extra. You can do that without penalty with some lenders. So that was the case with me, Ernest. Whenever, let's say I get like an extra money for like Christmas or something like that, let's say like 1,000 for a scholarship or something like that, you can use that to pay and you won't get penalized for it. But there are some student loan lenders that do penalize you if you do decide to add money early on and sort of deviate from the plan you have set. So that's also something to keep in mind.
And another thing I wanted to mention is, for example, if you do a $25 monthly payment, I know Chethana mentioned that you can relieve your cosigner of that, like after consecutive payments, but I got clarification and they said they want you to actually pay the principal amount for like maybe 2 years, and then you can like say cosigner, bye-bye. But that is another option. But if you can not pay 25, like the difference between paying $25, which is like an extra $300 that you have to borrow, or you can just sign up for automatic payments, they come about the same. And but at least with like $25, you're just mentally saying that you're paying back your loans. That helps you. Does anyone have any questions before we go to our last slide?
I had a question.
Yes.
So when applying to medical school, do medical schools want some kind of like, I don't know how to explain it, but maybe a document with to prove that you can pay for it for the whole 4 years? So do you need to find a student loan before you apply or after you apply and get accepted?
So I can start and then Chetna, you can come in.
Okay.
But some schools do require that you put all of the money for like maybe the first year or the first 3 or 4 years, which doesn't make sense. That's like almost $400,000 in an account, and show that to them. Some just require it for the first, like I know for visa purposes, you do need to show a bank account saying, hey, I can pay this to get your I-20 on time, or you basically wait until you get your private loan and then show it to your school, and then you get your I-20. There are some schools like I think it's Penn State. Their medical school actually requires that you have like $300,000 in a bank account before they even consider you. So you have to look at their like what conditions they have for international student and make a table based on that. But for the most part, most schools don't require that, and some schools actually have the option of co-signing for you. That's another thing we didn't mention. I know schools like Harvard that do that, and Stanford, they co-sign loans for their students. So that's another option.
Yep. So Eniola pretty much said what needed to be said. So some schools do want you to have an escrow account. I believe that's what they call it, and just show all the money for all 4 years, which is really hard, but that might be something to consider when you're applying. Is this school the right fit for me in terms of payment options? Well, some schools like the one we go to, they only required us to show like the first year and show that we have, like, if you have room and board, for example, provided by somebody else, to show like a letter that they're providing you this, and if not, to show that you are actually able to like live. So show the amount that are for your expenses, rent and so on, like the total to basically get your I-20. Yeah.
Thank you. So just to make sure, you first find a student loan lender, you apply for the loan, and then you apply to medical school, or after
No.
you get accepted, you can look for a loan?
So get into medical school, then you apply for a student loan, then you get your I-20, then you attend school. Because no one's going to give you a student loan without, you have to, that's another thing we didn't mention on the student's part. You need to show your admission letter.
Okay, thank you.
Any other questions? Okay. And so, Chetna, you want to go?
Sure. So some final thoughts to wrap up what we were basically talking about. Student loans are things that we have to like eventually pay back because these are things we're borrowing, right? But there are some very rare opportunities out there that are scholarships for international students. Even though it's really hard to find them, keep an eye out for them. There might be internal ones from your school that you might be eligible for. And I also know that Empower has certain scholarships. And Empower is also like one of the lenders. So keep an eye out for that. Discover, that's also another private loan lender. So they also have certain rewards built in, like let's say for good grades and so on. So however small the amount is, they help out. So you can keep out for keep an eye out for these perks. And then just to reiterate, do your research. Do not apply to multiple student loans without really narrowing it down. And compare different lenders through like websites that I add, like one of the websites I added to like the table before, so you can see like their rates, their different perks and so on, especially the interest rate and repayment options, the two most important things when it comes to student loans, I think, apart from your cosigner. And be very prepared to like repay the student loan. So think about like the specialty you go into, sort of calculate how much you might be making, so you know that, can I pay it in 7 years versus do I have to pay it in 15 years? You know, things like that. And also the specialty you go into. I know most of us like going in, we have no idea. So of course, that's not even something to think about, but it's just something to keep in mind. Because ultimately you do have to have a secure job in order to pay these. If not, it falls to your cosigner to pay your loan, and that's not something you want to happen. So, yep.
Yes. So I think for Discover, you get $200 if you have a 3.0 GPA or higher. I think my mind was saying, is it $20 or $200? And I'm like, I don't think they'll give $20.
Yeah, probably 200.
Yeah. And keep in mind that, yes, you may be taking multiple different loans, but if you take them from the same company or even different companies, you have the option to refinance and get a lower interest rate. So, like my sister would always tell me, stop worrying about the future and the total amount of the loan and just focus on the interest rate. Like, would you be able to pay it when you graduate? And a good thing with Accent is they give me 3 years, like during residency, like maybe my third year during residency is when I will really start paying these loans back, which is awesome because you don't make money in residency, right, Dr. Chino?
$50,000 to $60,000. Not enough to pay that.
Right. She said, okay, my doctor's here. And she said $50,000 to $60,000, and it's not enough to pay anything, or most of it. So we have questions. I got a direct message saying, what are the chances that the application for student loan gets rejected? And would applying to less companies be harmful in case you don't get the loans?
So you are, I mean, usually the lenders do get back to you pretty fast. My experience has been like 2 to 3 days. So if when you apply today, you might hear back maximum within 1 week. So you still have time to apply for other lenders in case like the first 2 to 3 options does not work out at all. And reasons usually for rejection are most likely the financial credibility of your cosigner. Yeah. And some of them actually do explain to you why they rejected you. So next time when you apply, you can actually fix that or find a different cosigner and so on and apply to a different lender. I don't know if you can apply to the same lender, though I haven't really looked into that.
You can.
Yeah.
So maybe like we have to space it apart. But in regards to getting rejected, a lot of them will say, we'll give your results back in a minute. And that's like a pre-approval. It's a conditional approval, meaning as long as like you meet our requirements, we will give you this loan. And so there's that option. And then there's like, after it goes back to them and they're like, okay, we need more information from you. Like, we don't like the fact that your cosigner's name is different on their pay stub, even if it's just like a middle name or something like that. And so you have to justify that. Keep in mind, these things delay you getting like your loan getting dispersed to school. So like now is like the good time if you're starting school in like July, August, now's a good time to get everything situated. And would it be harmful in case you don't get the loans? Well, not really. As long as you don't apply to 10 and get rejected from 10, as long as you get money from at least one, that's always good. Oh yeah, the cosigner does have to be US citizen or permanent resident.
There's also another question about can you go into detail about refinancing? So from the very little I know about refinancing, that's something that you will have to do after, meaning let's say you graduated, you are done with residency, and now like you're standing is different, you have a higher salary and so on. And so that's when you'll be able to sort of refinance, and maybe that's also a point when you can actually remove your cosigner for those loans that let you, because now you've been paying for a while, let's say, and so on. And it just basically adjusts your interest rates. Maybe let's say it was 7% before with a cosigner. Now you have a salary and the means to pay for it. So maybe it'll be a lesser rate. So, and you can pay it faster kind of thing. So some, they do let you combine your whole loan, but that's maybe something Eniola could talk if she knows more about it.
So yes, I don't think the other one is like common, but I mean, I don't say nothing is impossible. What I know about refinancing is someone else, let's say down the line, Discover gives you like for example, we're using different companies, and then Discover comes in, they're like, we can give you better refinancing, whatever. So it's like applying for new loans. Like, who's gonna take up and pay all these loans that I've taken, all these principal plus interest that I've accrued till now? And then they refinance it, meaning that you would just pay like let's say you owed 400,000. And so, and they paid that, and now you have to pay them, but your new interest rate is 5%. And so you would still pay the 400,000, but now you'll be paying 5%. This is so confusing. 5% of 400,000 interest. That makes sense. Can someone confirm that that makes sense?
Yes.
So yeah, we'll worry about it in 10 years.
There's another question, a direct message. So can you apply for loans in any year of medical school, or do you have to start in the first year? So if you do have the means to pay the tuition and other things the first year, somehow you do not have to apply. You don't have to apply the first year. You can start your second year whenever you actually need the student loan for. Again, that goes on to, let's say, first year. If you want your I-20, then you will have to show how you're able to do that without the student loan, basically. And it could also be the other way around. Let's say somehow after first year, through some process, you got a green card. That happened to one of my F1 friends. She got married, and so her status changed. So the first year she was F1, applied for private student loans. Now for her second year onwards, basically she's doing federal student loans. So that's also something that could happen.
Another thing to mention about private student loans versus federal student loans is that it's not eligible for loan forgiveness, which sucks, because most physicians actually get that as an option if they work in like maybe internal primary care in remote areas or rural areas. So so the government can't pay the loan or can't forgive the loan. But we have companies like Accent that offer $10,000 scholarships. It's just such a dreadful process to apply for it. Some of it is easy, some of it is like they do, like, what's the word of that thing when they give out free stuff? Like you do a raffle and then they give you, what's it called?
Giveaways.
Yes, giveaway. Yes. Where you just have to follow them on Instagram and they actually post who got it. So it's like $1,000, which is something.
Another question we have, is there any way international students can get federal loans? Unfortunately, no. Yeah, the only way that I mentioned was if your status changes down the line. That's the only time you will be eligible for a federal student loan. But to add to something Eniola said about like loan forgiveness, so even though we don't have loan forgiveness opportunities, there are programs down the line. If you were to, let's say, go to a rural area and practice there, you have like an additional stipend added to your salary just to pay off your student loans, and international students might be eligible for that. But this is as a resident or as a physician down the line. So there are programs like that that might pay, like, let's say $100,000, like a signing bonus kind of thing to your salary just to pay off or help out your student loan. But we have to look into those programs and keep an eye out for those as well.
There are also research opportunities the one I know about is through the NIH, and I know that like because we're international, but then the thing is your status may change by then. So the NIH does offer like physicians who do research, it's part of their grant, to and they may pay like some of it. So, you know, if you get a research grant, that's something you could use as well. Do we have any other questions? Come on. Who has questions about medical school in general, loans, anything? Okay, well, if that's it, thank you all for coming. I guess we can stop sharing now.
Oh.
All right, thank you so much.
Oh, we do have another. Do some companies freeze interest during residency?
Mm. Oh, that is something that you should mention. You know, whenever they say like the government is freezing interest rates, it doesn't actually work on public, like private loans. So that's another thing to think about. So,
And private companies don't really freeze interest rate, not really. Your interest does accumulate. You can just defer payment, meaning you don't have to pay until you are done with residency, but your interest still accrues.
all right. Thank you for coming. We will see you next time.
Thank you everyone for coming, and thank you guys for presenting too. Oh, perfect. So the recording is stopping and I'm going to be uploading it. Probably in a little bit, it takes a little time. And then we'll give an update then when it's uploaded. And where it can be accessed.
Yes, you can find that information on the Instagram. They're going to say it when it's posted.